Okay guys, so we're back in issuing stock, and this time you guys are going to get a chance to respond back and answer questions as we go. So let's go ahead. Okay, so here we have the issuance of stock practice, and this looks just like what we had before, except we've already filled that out. So I'm on this tab down here. Practice 2 notes is going to have some receipts and memorandums this time, and then we have the practice 2 work. Later you guys will fill out the personal practice notes and the personal practice work. Okay, so let's go back to these notes. Some things have happened, and these are in order of dates. So we have the 12th, 13th, 14th, 15th, goes all the way until the 18th. So we're going to just do these in order of date. All right, so for August 12th, we have receipt number 54. We received some money from the stockholders, and we issued some shares. So let's go ahead and get that cash. So we received $432,000. Let's put that cash in the bank. So $432,000. Great. But we've got to issue some stock, right? So we've got 3,000 shares of preferred stock. Okay, so preferred stock is $25. So we are going to give equals 3,000 shares times $25, and that's $75,000. Okay, and we also issued some common stock. So there was 7,140 shares, and that would also be at par. So this is going to equal on common stock equal $7,140, or I'm sorry, 7,140 stocks times $50. That's $357,000. Those two added up equal $432,000. So we're balanced. So on August, what was that, the 12th? Yeah, on August 12th, we had cash in bank that was debited so that we could get our business going. And we also issued some stock. So 1, 2, 3, 4, preferred stock went up by $75,000. We also had some common stock. So 1, 2, 3, 4, common stock. And we got $357,000 from that deal, which is great. And then that was receipt 1, 2, 3, 4, 1, 2, 3, 4, receipt, I believe number 54. We'll check that in a second. And that would be it, the first entry to get this started. Okay, so let's go to the next one. Yeah, 54. This is memorandum number 422, and this is August 13th. We gave some stock for non-cash assets. So we gave some stock, we got some things in return. So company A issued 3,840 shares of common stock in exchange for office equipment at $4,000, building valued at $154,000, and land valued at $27,000. I'm sorry, this is supposed to be something else. Okay, so let's look at our second entry. Okay, so let's look at our second entry. And company A issued 3,840 shares. That's not right. This should be 37. Sorry about that. 3,700 shares of common stock in exchange for some office equipment, some land, building, sorry, and some land. Okay, so let's go ahead and start recording this. 3,700 shares. So we've got 3,700 shares at par value, we assume, unless it says otherwise. That's $185,000 in value for the common stock, and then we should have a balance for the assets given to us. So we've got office equipment at $4,000. Let's go ahead and put that down. Office equipment, $4,000 debited to us as an asset. We have some other assets, a building, $154, and land at $27. So a building at $154, and some land, did I say 27? Man. All right. And then we should be able to add those up, 27,000, 154,000, and 4,000 to get the right numbers. So let's find out real quick. I'm going to pull in a little calculator here. I like to do it sometimes over here. So 27,000, 154,000, and then another 4,000. That's 185,000. So great. So that all adds up. Now we just need to put this in the journal. So on August 13th, we received some assets. Building, okay, we received $154,000. Then for the land, we received $27,000. For the office equipment, it is $4,000. And then finally, we've got to do our credit, and that was the common stock that was issued. All right. And that all balances. So now we just got to put the memorandum here, which was number 422. So 1, 2, 3, 4, 1, 2, 3, 4. Memorandum 422. Okay, great. Let's move on to the next day, August 14th. All right, so August 14th, we received from stockholders some money issued for 1,250 shares of common stock, but above par. Okay, so that's important. So let's issue the 1,250 shares. So we're going to go to the stock. We're going to give 1,250 shares, but remember, shares are only going to cost $50 in these examples, so times 50. That's what we're charging for those stocks. So that's $62,500, which means that that is just what was issued for the common stock, but we got more than that in money. So we got $75,000 in cash. So I'm going to put $75,000 here for cash. Now, if we add that $75,000, I'm sorry, if we take that $75,000 and we compare it to the $62,500, they're not the same. It's not balanced. And that's because we had an excess. So in credit, we're going to have equal how much money we got minus how much the stock cost, and that leaves $12,500 in excess of what they were supposed to pay. Okay, so one more time, let's do this. We got cash in the bank. We received a check for $75,000. 1, 2, 3, 4. We also issued common stock, and we issued $62,500 worth. But that does not balance. So we know that extra money was paid toward us, and because we charged them $60. And so we are going to also account for the paid in capital in excess of par. Yeah, it's crazy. Okay, $12,500. And now those all equal each other. So we have to get the receipt number, 412. So receipt, 1, 2, 3, 4, 1, 2, 3, 4. Receipt number 412. And that's our third entry. All right, let's go back and look again. So now we have memorandum number 567. We received some stock subscriptions. Okay, those are fun. Company A has received subscriptions to 7,000 shares of common stock at par, so they're paying $50 each, from Big Money Group. Please make a journal entry to record the stock subscriptions. Okay, so we're just receiving the subscriptions. They haven't paid yet. So on August 15th, we need to add 7,000 in subscriptions. So August 15th, we'll go ahead and put that here because we know that's coming. We're going to issue 7,000 in subscriptions. Now remember, this time it will not go in common stock. It's not going to go here. Okay, they haven't paid yet. So they have subscribed. So they owe us. So this is money that's owed. It counts as an asset. We're owed this money. This is 7,000 shares, so 7,000 stocks. So we press equal, 7,000 times each stock costs $50. So that's $350,000. Okay, so that means that over here in the credit, to keep the debit and the credit balanced, we're going to put $350,000 that has been subscribed. That's owed. We cannot issue this yet. It has not been paid for. Okay, so let's go back. Oh, actually, that was it for that. So let's go ahead and write that down. So the debit was subscriptions receivable, which means they owe us for the common stock that they asked for, and they are asking for $350,000. Okay, then we also have a equity account, common stock subscribed, and they are supposed to get $350,000 worth of stock if they pay for it. Okay, so it's subscribed, it's owed to us, we owe them when they finish paying it. Let's keep going. Oh, I forgot memorandum number 567. So 1, 2, 3, 4, 1, 2, 3, 4, memorandum 567. Great. Okay, let's see if they start paying for it. Receipt number 67, August 16th. We received some money from Big Money Group. That's the same people. Okay, they paid $50,000. This is down payment for 1,000 of the 7,000. We're just going to double check their math real quick. So they said that they paid for 1,000 of the 7,000. Okay, so that means that they should have paid for 1,000 times 50. So they should have paid 50,000, which they did. Okay, just double checking their math. So we got 50,000 that they have now paid us. All right, out of the 350,000 they owe. All right, that credit that brings their bill down is now cash in bank. They sent us a check for 50,000, and it balances with the credit in what they owe us. So they don't owe us that anymore, at least that portion. We still cannot issue the stock. Okay, so that was August 16th, and we have cash in bank. Love it. All right, so that was for 50,000, and then we took down the subscriptions receivable from the common section, and it's balanced. All right, and that was receipt number 67. Receipt number 67. All right, so that's good. Let's go ahead and move on to the next transaction. So we have receipt number 75, 100,000. That's for the 2,000 of the 7,000. Makes sense. Double the shares, double the money. So 100,000 now has been paid. All right, so that's cash in bank, 100,000. So we got the money. They owe us $100,000 less in the receivables. Let's go ahead and record that. August 17th, cash in bank went up 100,000. The subscriptions have gone down because they don't owe that anymore. They are getting close to being paid off. Okay, and then we just got to record where this happened. This is very important because that allows people to track where you came up with this stuff. In case of something bad happening or somebody making a mistake, it's nice to be able to track it. Okay. All right, so now we've done this one, We are moving on to, did I put 67 or 75? My bad. 75. Okay, now we're on receipt number 84. August 18th, received from Big Money Group $200,000 to finish it out for the other 4,000 shares. So let's go ahead and go back and give us that $200,000. So we have $200,000 coming from Big Money Group. They have $200,000 less now that's owed. Now, if we just check this real quick, this is $350,000. So what we're going to do here is we're going to go ahead and balance this out. Balance, and this would be August 18th when it was paid, is now 0. Okay, so this has been balanced out. Everything's back to 0, and we're doing that here. Of course, in real life, it would be more complicated. We're doing that just to kind of double check our math. Okay, so that's great. So let's go ahead and mark that down for August 18th. Okay, so that would be cash in bank for another $200,000, which is great. Okay, and then subscriptions receivable is going to be $200,000 less, and that was receipt number 84. Sweet. Now, they're done with the subscription, but we haven't given them their stock yet. So to finish this out, on the same day, August 18th, when they're done paying, we are going to give them their stock now. Okay, so the common stock subscribed, where we started here, that $350,000, they don't owe that anymore. So we're going to put $350,000 here. we now have a balance on August 18th of 0. Okay, that's done. So that's cleared out. And we now can add the common stock up here to common stock. So this is 350,000. And so we're going to add the common stock. Common stock. They both were 350,000. And that was for memorandum number 584. A reminder to make sure we gave them credit for it. Awesome. And that is it. That is a lot of work, but that is how you take care of stocks. All right. So if you guys have any questions, concerns, if that was too much for you, just let me know. Just feel free to ask questions and get help. But tomorrow you are going to be doing this on your own. Of course, that doesn't mean you can't ask questions about how to get help, but that's the basics. All right, I'll see you.